Hi everyone. Welcome to our market talk. So 2 weeks have passed. We have, at least I have quite a few updates to my portfolio. Uh, I know that Raphael had a family issue, so I hope everything's fine. And today I will start from my update. Uh, so yeah, I'll share my screen. Yeah, so it's already a norm, a pattern for me to start from this bad boy, which is XLU, because I was riding the trend for quite some time, and for quite some obvious reasons, I'm not long anymore. I closed that position, uh, but it's not the most important thing. The most important thing, I believe, is that it was a great example. If you remember our last market talk, I was stressing a lot about these negative correlations that happened between the SPY and the defensive sector. So mostly XLU, but not only that. And even though when 1 week ago we had the ticker show on Twitter, I believe the show was somewhere here. It was still not clear whether this rotation is really about to end or not. But now we are way lower in terms of XLU, and as predicted, stocks, especially tech stocks, are going up, trying to catch up with the S&P 500. Of course, the NQ is still not there, but not much left. So we will monitor correlations very closely. And main scenario is for NQ to reclaim the all-time high, because that's the only thing that is missing from the broad risk-on perspective. Of course, we have volatility going up. I'm sure there are a lot of narratives on why it happens. Maybe a presidential election is one of them, but I am not a big fan of thinking about the narratives or what's causing one thing or another. I prefer to just look into what market is telling us. So interesting to see that while volatility is going up, but risk on stocks, when we talk about broad index, are also going up. So first, let's talk about the correlation, as always. So 2 weeks ago, we had negative correlations in XLU versus the SPY. Now the correlations are positive. For example, 10-day correlation is 0.15, relatively low, but it's no surprise because it was negative and it remained negative for basically half of last week, and only on the second part of last week it started to grind up and became neutral and now positive. And we can see that in a 5-day change in the 10-day correlation. So XLU literally moved by 0.64. So you can just do a very simple math that even five days ago it was deep negative correlation when we are talking about 10 days. So overall trend is that correlations are strengthening. We will take a look at every sector correlations soon, but they are not high. Nothing to be worried about. The only correlations that are moving to different directions are XLE, which is no surprise. And by the way, I'll touch on oil a little bit later, because today oil had a great day. I have no positions in that. I traded a little bit of CL futures, but I have no other positions related to oil and XLB. But overall correlations are strengthening, and we can take a look at the average 10-day sector correlation to SPY, which is and you can see that they are strengthening. They were in 0.4, 0.3 territory. Now it's 0.57-ish. So still, if this trend continues, there is a long way to go until it becomes a problem. Now it's definitely not a problem. And my overall bias now remains the same. Actually, it's a little bit easier even to for my bias for me, because 2 weeks ago, like I said, there were only strong warning signs, but these were only warning signs. Now it's happening. We can clearly see that it's happening. So everything is basically the same. What I was expecting 2 weeks ago, I'm expecting now. So I expect money to flow out of the defensive sector, and or at least to not go into the defensive sector. And like I said 2 weeks ago, I don't expect a big crash in stocks, and everything is absolutely the same. I don't expect the crash in stocks. So let's take a look at ES and NQ. So ES is basically ES made a new all-time high and now is sitting there. Today we had a small correction, but I mean it doesn't count. ES is looking very strong, and the only problem here is the regular term range, and actually a regular term range made a lower high, which is usually a great sign for people. Then you see that to not be adding. We will compare this to NQ very soon. I know that Raphael is having a hard time not buying NQ. He will touch on that. But yeah, so ES looks. I was talking about that for many months, that ES is way stronger than NQ. And now, yeah, it's still the same, but the gap is not that big. And the only thing that is missing is, of course, for NQ to reclaim an all-time high. And from the futures perspective, I never back adjust my charts, so all the rollover gaps are there. So from that perspective, I'm looking to almost 21,000. So what's left? Yeah, we have, let's call it 500 points, which yeah, for NQ it's one good day, but of course that day can happen or it will not happen. We will see. Market will tell. But yeah, situation is still the same, even though NQ lags, but that lag is not big, and the NQ now looks quite strong as well. Situation in ranges is exactly the same. So that's another reason why I'm not buying NQ here. But yeah, surprise, surprise! I have one options position in my book now, and that position is NVIDIA, and I will touch on that because I like momentum. I like trending things to trade, and yeah, before the show we were talking actually that a lot of tech stocks are lagging. They are ranging, floating around, but not all. Of course, not all tech stocks are doing that. And basically, when we had this test of a neutral trend and then break above back to bullish, here I was watching the option prices and overall volatility, and of course, because of this gap, options were not expensive, and I bought a call spread. So this is a very boring position, and actually it will expire next Friday. So we will see how it goes. But I bought out of a money call spread, which is now moved way more than I expected. But of course, because it's a call spread, so P&L is limited, but everything is going according to the plan. We will see how it goes. But that spread is 125, 135, and I was not expecting Nvidia to go to 135, but for one reason or another, for market forces took it there. So we will see if it stays there or not, which is of course not a fact. But yeah, I bought at that time. It was out of the money, and I paid really cheap for that compared to the potential upside of 10 points. So yeah, I have it, and I don't know what needs to happen for me to close it early. I doubt. I think I'll close it maybe 1 or 2 days before the expiration, uh, because from theta perspective of a sold option, there is still some money that can be collected if market stays there, of course. So yeah, my book. I don't have XLU. I have this Nvidia thing, and I'm trading futures now, day trading futures. So I don't have any other positions that are being held overnight. Now only this thing. I'm sure Ted will touch on what's happening from a macro perspective and what can we expect from that. But overall ranges, I want to just warn people that a lot of stuff, a lot of assets. I'm now talking about equities, but a lot of assets are sitting either close to the top end of the range or in the middle of the range. So now I don't see any good risk reward ratios to execute my trades on. And okay, of course, bonds. We will start. We will go to TLT. And what a beautiful picture it is. Again, we were talking a lot about that, but well, what can I say? Don't make one mistake, which I had a discussion with one client, and a third client a couple of days ago, about basically if it's a good idea to be buying things on if they are deeply oversold, so basically touching low end of the range every single day, but the price continues to fall, and basically low end of the range can go way lower. And my answer is always don't buy bearish trends, and buy on a very clear sign from price actions that price wants to reverse. For example, here, because we are deep in a bearish trend, this is not a sign. Of course, when I was talking about day trading or risk management, I was always saying that buy things when we go up, and never buy things that then way go down. But in this picture, I mean, one green candle doesn't count. It's a deep bearish trend, and of course, same situation as the equities. I was mentioning that they are either on a top end of a range or somewhere in the middle. Same here, just in reverse. Again, shorting here would be against the process, and definitely not a good idea, because of course it's oversold. But look at the longer term range, and we still have some downside. So if we good example about my trading and my view on where to execute would be if we get a correction up, a move up, close to neutral area, but we don't go into neutral area, and then we would have a red candle. Then I would try to short. Of course, it depends on this. So I know that there were questions, because a lot of people are big percentage of users are basically looking into the range alone, and because it's easier for them just to see, oh, low end, high end, okay. But I just want to stress that, of course, it's the entire picture and the process. And oil. So yeah, so bonds. I just wanted to talk about that, because we are touching on that every show, and before the rate cut, we were talking about my guess, and it was not only my guess that a lot of retail people will try to buy these things, but no. Okay, oil. I promised to talk about oil because it's interesting. And why it's interesting? Uh, well, yeah, you all know that I'm looking into futures, and I think that futures leads everything, and that's why I'm. But oil futures can become bullish, and of course that's not what uh, Tintwit and some people, some analysts are expecting. So we will see. Actually, it's a very interesting point in time and point in price, because if oil reclaims bullish trend and ends up strong, actually it can means cause some reversal, and because of correlations in XLE versus the SPY and some other sectors. Actually, uh, I will be very interested to see how all other equity-related sectors and indices will react to that. And of course, from a macro perspective. Yeah, so I just wanted to touch because when I'm trading futures, usually it's intraday, so I'm not necessarily looking into. I'm always looking into ranges, but I'm not necessarily looking into things like where we are based on a MFR trend, just because my trades are very short term. But then for my portfolio construction, I just saw that and I wanted to touch that, monitor oil, because things can become really interesting there. And actually, I'm monitoring that, and I think that in 2 weeks we will have a clear answer on that. So yeah, most important things. I'm very happy that things happen the way they happen, because again, I'm always stressing the importance of correlations and how to form your view about different assets and sectors based on correlations, and why I think that every single day should start from monitoring what's happening in these correlations. So now, when this thing happened with XLU, I'm just very happy that, and I hope that maybe more people will start looking into correlations, and I'm sure if you do, it will have a positive impact for your overall portfolio performance, volatility, diversification, and risk management, which is basically what we are all talking about here. So yeah, that's it from me. We will see basically two important things apart from what I yeah, basically two things to watch for the next 2 weeks is whether NQ will catch up and make new all-time highs, and what happens with oil and also defensive sectors. So these are the most important things for me now at this moment. So yeah, I think that I covered quickly what I wanted to cover, and yeah, so I'll stop sharing my screen. I hope uh, we will not get any big shocks from macro, but yeah, regarding macro, so Ted, I think you will give us a way better picture about what's going on from macro space. So yeah, I'm very interested to see what you have to say.
No, thanks. Thanks for having me on. Yeah, so a lot of changes are happening, as you may recall from last time I was on. I had been pretty long bonds and long non-dollar FX, and that's changed. And so I want to talk a little bit about what's going on under the hood, and share with you my screen and put this into presentation mode. So I'll touch briefly on the macro regime. We're going to be very quick on what the current regime is. I'm going to talk about what might be happening here under the hood. I start to get really sensitive to changes taking place when trends start to break and when my stops start to get hit when I've been riding trends for quite a while. And then we'll talk a little bit about market signals and some of the trades that I have on. So the macro regime, per my favorite macro guru, is Goldilocks, which is inflation down, growth up. And substantially we can substantiate that when we look at the inflation rate, which is CPI, just came out today. You can see the trend is clearly lower. That said, we were expecting with today's CPI release that we would be at plus 2.2%, and instead we were a little hot at plus 2.3%. So question that you have to ask yourself is, are we bottoming and turning higher? And when you take a look at the core inflation rate, you can see that that has already started to inflect higher. Consensus was plus 3.2. Actual today came in at plus 3.3 year over year. So we have a little bit of a tick up in inflation here in the United States. And contrast that or complement that with the GDP now. And you can see GDP now, which is the Atlanta Fed's real-time nowcast, ended for Q3 24 at 3.2%. It's been bouncing all around. We were as low as 2.5% on October 1st. And then yesterday, and actually on the 8th, it was at 3.2%. So that's up relative to Q2. So we do have ostensibly an improving growth forecast with low inflation. That's a pretty good environment for equity investing. It had been a good environment for bonds, and it had been a good environment for non-dollar related currencies. So last week, and a little bit the week before, but last week in particular, I started to get stopped out of a lot of positions, or I got stopped. My stops were hit, and I started to manage out of my positions. I don't place any of my stops in my trading platform. I always have that outside my platform. But what it really, when things first start happening like that, where a whole sort of asset class, bonds in particular, start to come under pressure, I start to ask myself, what's going on? What's happening under the hood? Are we actually experiencing some sort of shift in the macro regime, and therefore should I be positioned differently? So let's take a look at the factors that have happened over the last 3 weeks. So this was on the 18th. Our beloved chairman of the Federal Reserve, Jerome Powell, cut interest rates by 50 basis points rather. That was a surprise to the market. And you can see here, this is a chart of UUP. This is the 18th. Basically, the dollar, and this is kind of a very contrary position. The dollar bottomed and turned higher. You would think if our rates were coming in that we would have a weaker dollar situation. Yet on the news, the dollar bottomed and started to turn higher. And you can see since that time, the dollar has basically gone from a bearish trend to a neutral trend, and is very close to a bullish trend at this point in my book. At the same time, a week or so later, the chair of the PBOC said, they announced about what amounted to about 1.3 trillion in stimulus. And what we saw was a big move in a market that had been punished badly over the past year, which happens to be a chart of the Shanghai Stock Exchange, or SSEC. They stimulated and then went on holiday for a week. And so you can see it came back on Tuesday. They sold it. Some people bought it, some people sold it, but it had been down. It did close higher today. My chart didn't go out to today, but so anyway, it's that was a big thing, and commodities surprisingly Didn't move as much as you would think on that news, but then we had a situation that's, hell is breaking loose in the Middle East. Um, uh, Bibi here has real bazookas, and when things got really hot last week with Iran, what we saw is that oil, which had been, trying to plumb new lows here, basically rallied a little bit. This was during the lead up to the FOMC, and then last week with the conflict, we really started to catch a bid on in oil, and you can see that has continued to rally higher. We put in a higher low here, and then today we had some positive price action. This happens to be on USO. So that's sort of third item. So then Friday happened, and on Friday, as you know, we've been looking at weaker jobs here in the United States. Payrolls were expected to continue to be soft. The unemployment rate was also expected to hold constant. Yet somewhere out of the blue, and some have called into question the seasonal adjustment in this particular print ahead of the United States election, some 2-3 weeks away from now. But basically, we had non-farm payrolls come in hot, and if you were buying bonds here, thinking you're buying at the low end of a range, this is what happened. And so this happens to be BND. It has sold off hard, continues to sell off. I cut most of my positions in bonds leading up, starting on the 3rd and 4th when I started to get stop signals here. I did leave some open today in expectations that the CPI number might be favorable and I get a little bit of a pop and I could get out of the balance of my positions. I didn't get that, and I continued to sell. Commensurate with that, we had a big bond vol spike on Monday. Some have said this is a function of basically moving into that 30-day period before the presidential election, but basically you've got, Vi showed the TLT chart just continues to get blasted. So volatility is up in the move index as well. So what's happening? I've in past episodes I've shared my portfolio allocation, but it's in such I won't call it disrepair, but is in such transition right now. I'm in risk management mode. I have a lot of cash earning 5%, and I've been managing my risk while trying to build some new positions and building on strength. So I've been cutting non-US dollar FX. I have a small long UUP position. I've been cutting bonds and steepeners. I've been adding to commodities. I've been adding to natural resource stocks, and I've been cutting any exposure that I might have to defensive equities. Going back to I was just talking a little bit about stops. You can see here some of my positions, lots of bond related positions and FX related positions, and you can see that
we lost the
don't see your we don't see your screen.
I guess it stopped sharing. Sorry about that.
Yeah. Now it's
so
okay.
Anyway, yeah. So anyway, I'm sorry. This is my list of stop lists, and basically you can see that over the past week, starting really on the 3rd, I started to get stopped out of positions. And so the way that I manage my positions is when my stop gets hit, I take 25% of my position off. And then I wait a day, I take another 25% off if it has not risen back above my stop price. And then I manage that over 4 days. So basically, a lot of these positions have been stopped. HYG hit today, and that has been high yield has been one of the stronger bond positions. I've held that since last October. It's been a year-long position for me, and I've started cutting that today. Just taking a look at sort of how the charts are showing this. What's going on here? You can see this is UUP. This is my trend, which is 3-month time series price momentum. And you can see it's starting to move up above its trend line. I have a small position in UUP, and I'm waiting for pullbacks to add to that position. You can see FXA. This is the Aussie. Basically last week started getting stopped out. Same with FXB. I'm out of FXB. FXC is interesting because this is Canada. Canada is a natural resource company. We're seeing great natural resource country. We're seeing good strength in natural resources, yet their currency is getting blasted. FXC as well, the euro having a tough time hanging on to any semblance of trend. It's coming into a neutral zone right now for me. I'm out of this position. FXY still bullish, but price action is such that, if you get long in this area, get long here. The way that I'm set up, it's about a 2.5 average true range stop on a moving basis. So I'm out of that position. So let's talk about those are the things that are not working. Let's talk about what is working. Gold has continued to work. This is the GLD chart. I had been a seller up here, and I actually I told Raphael the other day I gifted 25% of my shares to my favorite charity because I was not optimistic that this was going to continue to roll higher with real yields in particular starting to rise. Gold had started to take some heat. It had a good price day today, so we'll see what happens from there. I still have a position. Getting into commodities, this is metals. This is industrial metals, the DBB. This is a position that I took here as it moved into a neutral trend range. It has been positive. It had a nice pullback. It looks like it's ready to inflect higher on who knows on what, but it's got some decent price action. DBA has been a good position as well. So this is ags. Agricultural commodities continue to tick higher. Volatility continues to come in. Has been an okay position. Relatively new position for me. Got long here on my weekly Williams %R signal. I've been hanging on to this position because I've not gotten a stop. But now we're in a situation where commodities, and this is sort of a global commodities, but it's heavily tied to energy, look like they are ready to move higher from here. So I want to be buying strength. Raphael and I have also been talking a little bit about silver. It sold off. I added position yesterday. I added in the day before on this pullback to trend. It had good price action today. My stop's not far below here, so we'll see if this pays. I've not been a great silver trader necessarily, so who knows? But this is a position that I'm now long. GDX, I also used this recent weakness to add a position in GDX. It's a pretty volatile instrument, so I don't have a large position. All my positions are volatility weighted, so I added over the last few days. I now have a full position in GDX, and I will also tell you I suck at GDX, so take it for what it is. I have not even though I've tried to make some money on this year, I've not been wildly successful, even though it's been a good trend. But you can see, 2 standard deviation moves are not uncommon for GDX. XLE. So I missed my weekly signal on XLE, so I didn't take a position. But last week, on Friday, it had definitely broken back to bullish trend. So I said, I've got to have a position. I bought here, but at the same time I bought at this top of the range, I also put on a put spread. So I had a 94 by 90 put spread on. So I put it on at the same time, which basically hedged about 50% of my position. It worked immediately. My stop was adjusted to here. I used yesterday's weakness to add to that position. And today I got stopped out of my, took off my put spread. So I'm reasonably optimistic this can go higher. I do want a position here, particularly as oil, as Vi shared, seems to be making a move. Another thing we talked about last time was global natural resources ETF. I'm long here. We've had a nice pullback to the middle of a range, and it looks like it's ready to perhaps move higher. So I am long natural resources, and this is a big contrast to what I have had. IEF, here's me. This position I've had on since May, June timeframe. I did add on this pullback right here. And then, of course, what was that date? That was on that was back on the 25th of September, a week out from the Fed. And it, broke lower on Thursday, last Thursday, which is when my stop was hit. And then, of course, Friday, it got pummeled on the jobs report. Maybe I didn't take off the entirety of the position. Like I said, I waited till today to take off the balance just because I thought there might be a pop on a favorable CPI print. That was not forthcoming. I don't want to own bonds right now. IVOL, which was my steepener trade, worked really well for me for a long time. It got punished on Friday. It did have some positive price action today. I used that price action to take off more of my position. I still have a very small position that I need to manage out of on the steepener. It's ironic because the steepening of the yield curve, well, we had a flattening of the 2s, 10s, but we had a big steepening of the 3-month 10-year. So the 3-month 10-year has gone, as of yesterday, was like had gone from like minus 110 basis points to minus 60 basis points. So a big move, and that's really because the long end treasuries have moved up while the 3-month has been held down by the Fed at about 4.75%. So I expected the steepener to work. Maybe it'll come back, but it's not. It basically, I'm working my way out of it. TUA is another one, 2-year Treasury, out. But on the bond side, what I have added recently in the past week and a half or so is CWB. CWB is convertible securities. It's behaving pretty well. I have a small position. I keep trying to. I've got a buy in good till canceled buy that basically tracks the middle of this range that I'd really like to add more to, but I have a partial position there. EEM, despite the dollar, has continued to work. I mean, we got a pullback here. I did add to EEM yesterday. Got a positive response today. Let's see from here. EEM, which is, has a good China exposure to it, is a way to play that. And then finally, I just want to take a look at defensive. So we talked about this all summer during the course of these market talks, and the defensive sectors have behaved really, really well. When everything else was chopping around back on August 5th, the defensives, in this instance, is high dividend, low volatility, has behaved really well. But you can see here we're kind of finding maybe a topping pattern. I don't know, still bullish trend. I do hold a position in one of my IRA accounts, but I am mindful that defensives are probably not going to work in what amounts to a reflationary environment, or worse yet, if we start to get into stagflation. SPLV, which is low volatility, same setup, similar structure, flattening, volatility is coming in, but it's not, maybe it bases and breaks higher, but could well be this bases and breaks lower. And if you look at XLP, which is Staples, that was a real strong performer here. Remember this is back on August 5th. This thing just kept going. And now is really under pressure and looks like it wants to potentially roll down even further. XLRE, which is real estate. I put on a call spread yesterday. I saw a potentially good risk reward in a 43 by 46, I believe, was the call spread that I had on. I put that on yesterday. With any sort of options trades that I might have, I don't, if they don't work, I get out of them because I can get back into them. But it hit my stop level today, and I am out of XLRE call spread. Small loss. I typically only trade options with spreads because you're long some, you're short some, and it just, it's still a small, and it's a smaller chunk of money. You don't get as big a return, but you give up some convexity, but at the same time you limit your risk. And as a 61-year-old, I'm in risk adverse mode. So and XLU, we talked about just not performing well at all. So starting to really break bad. And so I'm in the mode that, perhaps we have, and this is XLV, which is healthcare, not showing any positive performance either. So our defensive sectors are under pressure. We've got commodities moving higher. We've got equities that are doing well. We're favoring natural resources plays. We're favoring metals, ags, and other commodities at this point in time. And that's just because I'm a momentum player and I buy strength and try to sell weakness. So that's kind of where I am right now, guys.
Thank you, Ted. So, Raphael, how is everything, and what are the changes and what you want to see in the markets?
Hey guys, so first I want to say that 2 weeks ago we had a great show. I mean, we talked about yields potentially having a phase transition. We talked about the potentiality of dollar to start behaving in a bullish manner. We talked about VIX starting to rise. I mean, except oil, where I was very wrong. I mean, we pretty much nailed it. So first, a little pat on the back. It was a very good show. So now let's go to what's happening right now. How the scenario I laid out in the previous show are playing out and what I'm seeing. Okay, so I'm going to share the screen as usual. Okay, give me a sec just to make sure I can see everything without Zoom in the way. Okay, so let's go to ES. So 2 weeks ago, I laid out two potential scenarios that I was looking at. Scenario one was a sell-off to trade, then bounce. Scenario two was just chop and then bounce. Both scenarios had to happen while Matrix was going down, and Vola stayed the same way, with Vola below trade and trend of Vola, trade below trend of Vola, and we got what we got was scenario two, so flat and then started to rise back up. I added to the long ES position at 5727. I tweeted about it when I added to this position. So this one is working pretty well so far. Today I had a big headache because I am watching Matrix turning. You can see here, especially true on NQ. I will show you now. And here you can see it's green, so momentum is coming back. I wanted to add so badly to ES, and I wanted to start a position long NQ today. What stopped me was the range on MFR. Reason number one, the range on MFR, upside downside ratio Yesterday was very good. I think it was like 2.5 upside downside ratio. And yeah, yesterday we had a very nice green candle on both. But today it was at 1. So the risk was equal on the downside and on the upside, especially we had the CPI news. So I bailed out. I didn't add to ES, and I didn't start NQ. So that's number one. Number two, another reason I chickened out was the fact that Vola on NQ and on ES, this is a blue line here for those using my script. Same here on ES, Vola is at the floor. So the issue is, if Vola is already on the floor, you should not expect a big move. So what I want to see tomorrow to pull the trigger, add to ES, and start a position in NQ is, I'd like to see a red day. It doesn't matter if it's a small one. I want to see a red day because I want this blue line to raise a little bit. I want to see that. And number two, I'd like to see the top of the range get back up. I would like to see the upside downside ratio be more interesting. So yeah, I tweeted I'm gonna add today because of momentum of matrix shifting, but these are the reasons why I didn't add. Especially, I don't want to ruin this very nice ad that I did on ES. Now let's go to Europe. So in Europe, I have a long position in CAC. But first, we're going to go to Germany. So Germany looks good. We had same setup as for ES. I also talked about it 2 weeks ago. Matrix was at top, so I was expecting a sell-off. That's what we got. Matrix is now trying to turn. And if you look at DAX versus the trade of volatility. So here it's on price. Here it's purely on vol. Try to go, reclaim, try to go, reclaim. For me, it's a confirmation, especially with Matrix starting to go up. So just like we had in beginning of September, this is just another ad. So I would guess that people who are long DAX used this used last week to add to their position. Now to and yeah, also on MFR, the upside downside ratio looks very good on DAX. Now to CAC, so I started a position here. Of course, I didn't take it out there. That was maybe stupid. And now we are back testing trend. I saw that we had 2 days on neutral on MFR. So I was a little bit concerned, but Matrix is also trying to roll. I'd like to see trade cross trend just to feel safer. Upside downside ratio looks good. We didn't break back to bearish, so I'm monitoring this one. Stop is at break even. No add here. I could have, but didn't. If we can get trade above trend, so here or here on board, I think this one has a lot of catch up to do. So I'm waiting to see if we can get trade below trend, and I will add to this one. Especially the macro in Europe. I mean, everything you hear is so dire. So when I look at the vol profile of CAC and DAX, there is a dichotomy. So could it be all the bad news before the good news? So far, volatility is saying could be. So let's see. So anyway, I have stops. We shall see. FTSE is going nowhere. 2 weeks ago, I thought that Vola would start to behave like their, let's say, continental counterparts, Germany and France. It's doing nothing. It's just chopping. It's a useless POS for now. You can see vol here just chopping around trade. So nothing's happening. I mean, nothing to do with FTSE. So not touching this one, just taking some notes. The Nikkei, I said 2 weeks ago that I expect chop to continue. There are some positive news on it. We are breaking my vola trend. Volatility is going down, but yeah, we are quite far away from trade breaking trend. So for now, I still expect chop for weeks, maybe months. No change there. Sure, if we start to see trade cross trend, I will probably be more interested. For now, like I said 2 weeks ago, I was very bullish on it. Now, I think chop will continue. Now on to DXY. So DXY, I laid out 2 scenarios. One was, so this is when we had, I think it was here, we had DXY on a trade. And my favorite scenario was DXY would make new lows, find the bottom, and then start to chop around until we could get a trend change. But market decided to go with scenario 2. So we broke trade, broke trend. Now what we want to see is at some point DXY to start to go down. In the same time, what you want to see is trade crossing trend, and you want to see DXY retest those two and hold. So this is scenario 2. So we are basically doing that. We are going up. Now we need to chop, make higher low, and then we could get a phase transition. MFR is now bullish, but we are barely above. So we are probably in the early innings of the change. Matrix is almost at top. I have no sell signal yet on DXY, so I would guess it can continue going higher before we get a sell-off. If I get a sell on DXY, I will tweet it. And then what you want to watch for is a retest of vola trend, vola trade, and see how it behaves, where matrix is when it happens, etc. Now VIX. So I got to buy on the exact bottom, actually, also tweeted about it. Since then, so I was expecting a retest of trend. The reason why I was expecting a retest of trend was that vola is very high, trade of vola is very high, and these two have to go down. They have to go down at some point. Like I mentioned 2 weeks ago, trade cannot push any more vola up. So meaning the asset cannot keep going down. They have to, vola has to go down, and trade will ultimately reverse. Now the thing is, I have absolutely zero idea what's gonna happen. So I expected the retest of trend. For now, we are not getting it. Matrix is starting to turn. And I looked at the backtest, not really backtest, the historical events when this happens. And I mentioned 2 weeks ago that usually what you get is a rally in equities, and you get VIX to slowly drift while vola go down, trade goes down. But yeah, I have no idea how it will play out. Frankly, I knew that we would get a buy. I knew we would get volatility to come back up. But I would guess we will get VIX to go down for a few days while matrix is rolling. My blind spot is I don't know what happens once matrix has rolled. So I think we can get move up in equities for a few days, but then the question will be, okay, what happens now? So watch matrix, watch where the VIX is when matrix has completed its cycle down, and then maybe we will be at the next show, I don't know, and maybe I will have more information for you. But yeah, vola is quite high. Trade of vola is quite high. Matrix is going down, so this one is good. But I have no idea what happens once Matrix will have completed the cycle. So watch this. For now, frankly, I have no information regarding the VIX. I have no view. We got the bounce. Now, not sure how it's going to play out. Now for CL. So this is the one I got wrong. So I got the buys here. I mentioned that, I think it was a month ago. Yeah, almost a month ago. I expected 71, 72, and then we will resume the move down. Little did I know that we would get a trigger. You know, I don't like narratives. I like the setups. And now the setup is what? Is volatility is trying to go down. We are making lower high end volatility and lower low. So potentially something is changing. For now, the way it looks versus trend and trade is not enough for me to consider change. I showed you 2 weeks ago what it looks like when CL is changing. So now we are somewhere here, but we aren't sure if this will ultimately transform into that. So trade crossing trend, this is when you get the real bull market, or if it's just gonna fail and break trend and trend. I can show you another instance of this. It always looks the same. First you break, then the cross, and then you start the shift. So if you want to go long CL, watch, sorry, I need to watch those two. Okay, watch those two. Watch when they cross. When they cross, and everything aligns, MFR aligns, matrix aligns, maybe we can take a shot and we could get a multi-week, maybe multi-month bull run. We shall see. For now, I'm not touching. I don't like the vol profile. It's not definitive yet. Now to gold. So I have mentioned repeatedly that you always should mark the mean for trade of vola. This is a black line. I marked it for gold, and I've been saying for, like, I would say a month, that when we get to mean, volatility will have no more room down. So the only path for volatility of gold will be up. What you get with volatility up is, of course, price down or chop. So now we finally got it. So of course, then you have a narrative coming, explaining why it's happening, etc. But the setup was there. So if you were long gold, you took off a lot of your position long, and you are waiting to see how it will behave with the vol spike. So for now, I have not been stopped out of gold. I have 1/3 of the original position. I will talk about silver after, but what I'm seeing right now is Matrix has completed its cycle, so I would not be surprised to see a bounce in gold to trap some late comer, and then volatility would rise again, so that at least we would see a retest of trend. Okay, so if you are buying here, I think it's more tactical than strategical. So you are playing the bounce, but beware of this bounce. We are trade of volatility is well below the daily mean, historical daily mean. And what happens always when we are there is sell off, chop, sell off or chop. So watch Matrix, I would guess, yeah, it's gonna go green, you're gonna get a bounce, we're gonna trap some late comer, and then boom, volatility will rise again, and the trade of vola will keep rising until we get this kind of pattern here that will signal, okay, now we can come back and buy again. So I have stop in place. I'm not adding. I'm just watching this play out. and be sure I'm gonna address that when I'm gonna add again. I could be wrong, but this is the way I play this. So silver got stopped out. I mentioned also that I was expecting a retest of 29 or 30, but the thing is I raised my stop, and of course minus 4% day, I think something like that. It was crazy day, got stopped out. Vola is starting to rise. I would expect same thing as I'm expecting with gold. We should see Vola rise, so some kind of consolidation, maybe a sell-off before we can get the next phase up. Doesn't mean that here on the matrix cycle move up, we don't get some kind of retest of this area in 32 again to trap more people who thought, okay, I missed the rally in gold. Now I'm going to silver because it's cheaper and it has more beta. I mean, they can add the narratives they want, but I would expect, yeah, this thing to maybe go somewhere here, then Vola to start rising, and then we have to monitor, okay, what happens when Vola is rising, trade of Vola is rising, and I would expect some kind of dip in this area, let's say 28.50 to like 30, consolidation there, so we can add again. But gold is driving my view for silver. This is the reason why I think the way I think for silver. Now, Bitcoin, I took a long, I think, yeah, that was here. And yeah, I got stopped up today. Stopped up at break even, so no damage. Matrix is rolling over, it's red, it's going down. But there are some interesting stuff I'm watching. So I'm watching Ethereum. Trade of Vola of Ethereum is going down. Still not as crossed. So I want to see what happens with price, and I want to see what happens when trade cross trend. The big issue I have with crypto-related assets is one of the proxy I use, Mara, is still far away from a trade transition. I can see it maybe happening in a few weeks. So for now, I got stopped out, not taking a position. I'm going to keep watching, and if I take another position, I'm going to mention. The big thing we mentioned 2 weeks ago, and I was talking about it for since when? Yeah, since August. I was expecting we got like some kind of chop box, so that's basically what happened. And then maybe a rise. So sure, they went a little lower than expected, but now what we are seeing is, so this is the 2-year, but it's general. You can use this kind of template for 10 years, 30 years, FR, French 10-year, German 10-year, they all look the same. Chop, and then maybe phase transition. So trade is starting to roll, Vola is starting to roll as well, but we are still not breaking trend. So the 2-year may not be the most interesting one. The 10-year and 30-year look more decisive. So they switch to bullish on MFR. I'm talking about yields, not bonds. So we were thinking, okay, what's going to happen? Are we in the early phase of phase transition? And boom, what you got was Vola starting to go down, retested somehow trade, and then moved back down, and you got the crazy move on US 10-year. For now, I don't have a sell on US 10-year. I don't have a sell on US 30-year. So it's overbought, but no sell. So maybe we get further up before I can get the sell, and then it will be the same setup as for DXY. When we get the next sell-off, where are we in terms of cross for trade and trend, and will they hold? So I will show you quickly US 30-year, look the same. So yeah, that's for yields. One thing I forgot to mention regarding dollar. So the good thing is for now, at least on the short term, the correlation between dollar and so QQQ and SPY. Let's focus on these two. Is not damaging. Okay, it's been like this also in the 10-day return correlation. It's let's say near zero. I would say neutral. So even if the dollar continue is move up, we are not seeing what we saw. I think in the last show it was, yeah, you can see here 5-day return correlation 15 days ago. We were deeply negative. So that would maybe explain why we got the chop. Also, that's another reason why we got the chop and inability of market to climb higher. Now the dollar is not a hindrance anymore, at least based on correlation. So the dollar can keep going higher. It won't hurt stocks for now. So something to monitor. I will end with a few stocks. So Google, not there yet. Not there yet. Just above trade, but very far from trend yet. So for now, nothing exciting. I'm monitoring Microsoft. So you can see I expected trend shifts, but see, Vola is stuck between trade and trend. Looks exactly like, almost exactly like Google. We need to see a decisive break of volatility to the downside. Matrix is starting to roll over, so maybe it's gonna happen. So I'm watching that. It's not very exciting. I mean, unfortunately. Another one I'm watching also is Amazon. It's looking better than 2 weeks ago, but it's been chop, like hellish chop for now since April. So I mean, how do you trade that? And sure, Vola is starting to go down. Matrix is starting to roll up. I'd like to see some action in the tech stocks. I mean, finally, please. So yeah, Vi said maybe we could see a shift of capital from defensive to tech. We've seen the money get out of defensive, but for now we are still not seeing the money go to tech. So I would say monitor these three: Google, Microsoft, and Amazon, because these are the ones that look the worst, let's say, among the big tech stocks. And if these ones can start to finally pick up steam, you would get the confirmation that tech is finally moving. So I'm gonna end there. Stop sharing. I hope I was not too long.
Very interesting takes. Thanks. And yeah, my main view was more about the index-based tech and broad index-based things. Yeah. But you digging deeper into single names is always interesting. So yeah, I rarely watch single names. Maybe I should.
So I will check now if we have any questions. No questions. Raghav sent the question before. He asked about what I would expect for volatility with elections, US elections is close. Like I said, the issue I have is Vola is very high. Sorry, volatility of VIX is very high. Trade of volatility of VIX is very high, and it's very hard to guess. So I'm going to share one last time. Sorry. Up. Okay, you know that VIX has stopped on the daily when Vola here on blue is at the bottom. When Vola is at the bottom, you know it has, at least in the short term, it has topped. For now, Vola is still very high, so it's very hard to make a guess here. I mean, we could see like Vola just crash and VIX go up. We could see Vola slowly going down and VIX just doing nothing until finally Vola VIX is rising, and then Vola would crash. Sorry, VIX would crash. I mean, very tough to say. I'm sorry, I really have nothing to add to this. This instance of trade of Vola VIX being that high, I mentioned in the last show, happened only 5 times. 5 times in the whole history of VIX, 5 times. So it's very unusual. That was the only question I got from Raghav. And nothing in the chat, as far as I can see. Yeah, nothing here. So we check on Twitter one last time, and if not, we can wrap this up.
Yeah, and about the expectations for elections, it's exactly what everyone can expect, which is volatility. The problem now is that during these times, no one has idea how it will affect things, because yeah, volatility will be there, things will go up, things will go down, and then down and up, and so a lot better is to focus on following the signal and risk management.
No question on Twitter.
Yeah.
I think we're good. So watch. I would say, yeah. I'm gonna be watching. I'm gonna be watching tech. In the next 2 weeks. That's the thing I'm gonna watch, and I'm gonna watch VIX volatility. So if you are using my volatility indicator, watch this. Watch where the blue line is going. It's gonna give you some idea, but very hard to see what's gonna happen. 2 weeks ago was very clear. Now, like Vi said, we're either at the top of the range or low of the range or in the middle of the range. I mean, for the thing you want to buy, they're at the top. For the thing you want to sell, they're at the bottom. And for the thing that you are expecting for regime change, they're in the middle. So anyway.
Yeah. I believe I had some issues with microphone. Sorry, but so I hope it was useful. Thanks everyone for watching, and yeah, for the upcoming elections, we will get a lot of volatility to both sides, and also based on the rotations and what's happening in the markets, I'm sure these upcoming weeks will give us some more clarity and answers. I don't expect big surprises, but more clarity will definitely help. So looking forward to it. Yeah, so thanks, Raphael. Thanks, Ted. Thanks, everyone, and see you hopefully in 2 weeks.
See you in 2 weeks.
Thank you.
Yeah.
Bye now.
Yeah, good show.